Hey guys, another week has passed and we're looking at again the weekly options update. This one is going to be somewhat of a repeat of last week. Not much going on. We're just kind of waiting for the market. I'm going to be taking some assignments on some things next Friday. I'm imagining, but that's all in the plan. So let's get through it. Just for those that are new here, I share my weekly trades from the Wednesday from the week before to Tuesday's close. And I do that every Wednesday. So if you enjoy that, please like, share, subscribe, do all that good stuff, and leave me a message down below. So we'll get started here. There's only about 6 openings, 6 closes. So it's not going to actually, technically it's about 5, and I'll tell you why. But we'll start with ARKK. If you guys remember, I didn't pull all my triggers on it was a week or two ago, where I rolled it from 64 and I rolled it to the same date. Well, now I rolled it to out to April, and I got down from 64 down to 60. So we're good there. Close those out. Realized a loss of about $575. But we rolled it down to 60 out to April 14th, I want to say it was. And we made all that up. So we still have 7 contracts of ARKK, and we'll show you that here down below. Next up, RYLD. Got out of RYLD puts. Had 4 of those left. Started out with like 10 of them. Bought them back for 10 cents. So profited 139 bucks there. I gotta get rid of these fees. I always forget about the fees. Someone needs to remind me about that every week. Just the numbers look funny when you're trying to go through it. So 139 bucks in 27 days from RYLD. Camping World, this was a put I bought back. It was a 25 strike. Bought it back for 15 cents, so profited $59.40 in 7 days on that one. And Dutch Bros, I had 2 puts. Closed the 41 that was expiring on March 18th for 50 cents, so profited 49 bucks there in 22 days. And then the Dutch Bros put I put on this week, which was March 2nd. I closed it on March 4th for 80 cents and collected $69.40 in net profit in 2 days. So those are all the closings, and let's take a look at the openings real quick. We'll go down here to 3, 2, and there's that Dutch Bros that I just spoke of that was opened and closed in 2 days within the 5-day period that I'm speaking of. And then ARKK, there you go. I got 7 contracts at the 60 strike now, all the way out to April 14th. Collected $2,510 for those. They are in the money. Did expect it to kind of level off here at 60. We'll see what happens. But I'm just kind of sitting and waiting. I can roll these out now if I wanted to, but we'll wait to see how the market recovers. If it does recover, I can just forever roll this at 60. Or I can decide to take some of the shares and roll, maybe take 300 shares and roll 4 contracts, or I don't know, or just roll all 7. Week by week we'll just monitor that. Right now it's $2,500 and $2,510 that we've collected in premium so far. Lemonade put, I sold an additional lemonade put on the drop. Got 1750 strike, got 65 bucks for that one. That one's expiring in March 18th, so that was a short-term one that I put on. I typically don't put on short-term stuff, but if you remember was it last week? I said I had a very high cost basis in lemonade, so I'm trying to get assigned either somewhere in the, because I also have a $20 put on this as well. Either one of these or both can be assigned to bring my cost basis down, and I'd be fine with that. Camping World, I sold a strangle. I do own 100 shares of Camping World, so I sold a covered call. I think my cost basis is under 35 bucks on Camping World, so I sold a $36 call out to April 14th, got 60 bucks for that one. And then I sold a put out at $26 strike, same expiration, April 14th, and I got 95 bucks for that one. And then after I closed down both of my Dutch Bros, I put on a new one out to April 14th, and I got the 35 strike, and I got 125 bucks for that one. So those are all the opens and closes. And now let's take a look at premium cooking. So far for the week ending March 8th, closed 6, open 6 positions. Profit realized because of that ARKK rollout. We had a negative of 253.01. Premium sold 29.2250. 2,500 of that was the ARKKs. So total premium cooking, we have $6,194.53. $32,000 in maintenance margins, getting a little heavy. But as you roll, some of these I can roll out and down. That will relieve the pressure on the maintenance margin. Buying power usage right now 29.2. Cash balance is $84,499, so creeping up there, but not on next week's update, but the week after, you'll see this go down a bit because I will be taking possession of some positions in the fund. Now, if you missed last Saturday's video, I'll link it up top and down below, and it shows you what I bought with this cash and what I plan to do a little further with this cash. So go ahead and check that out if you haven't already. No deposits, no withdrawals. Net lick is down to 109,600. That is a year-to-date low. Return on maintenance margin negative 0.81% because we had a negative profit, and return on net lick down 0.22. So overall, not a horrible week, right? Only realized loss of 253, but our cash balance went up. What is that? 800 bucks or so, $900 roughly, and that was mostly, a lot of that was from that roll of ARKK. So overall, though, if we look at percentage decrease year to date, we had the 123.1 to start out the year, and it's down to 109,600. So just at 11% down for the year. But like I said, it's probably going to be just fine. As long as you leave yourself enough room to manage positions, you can forever roll positions and follow the market down as well, like I've done with that ARKK. Like, you remember that I said those 7 contracts were at a 60 strike. That started out in December as a 105. So you can just follow the market down. That's why I like options, right? Like, if I owned ARKK at 105, I don't know what I would do right now, right? You'd be sitting on a huge loss there, right? So to me, I mean, what would that be? If that's 60 bucks right now and it was at 105, that's 45. That'd be a $4,500 unrealized loss, but that's big, right? You'd need to really throw a lot of money at it to follow that down and get your cost basis down. So with options, that's what I like. It doesn't cost as much to get your cost basis down. So we'll continue to monitor that and see how that goes. So overall, 11% down for the year. Not bad considering what the indexes are doing so far. S&P's down 13%. NASDAQ is down 19%. The Russell 2000, which I kind of model my portfolio after, it kind of runs that way. If the Russell 2000 is doing good, then I'm doing okay. If the Russell 2000 is doing bad, usually I'm doing bad. So it's down 13.3. Finally, one of the indexes beating me for the year. Dow Jones down 10.8%. So, like I said, check out that last video. You'll see what I'm doing with the cash balance in my Interactive Brokers account. I'll link that up top and down below. That's all I got for you guys this week. Hope you guys have a great week, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.